Okay guys, quick update with Bitcoin. So I told you that I would put up a video telling you, look, if the US enters a recession, I want you to have a realistic bottom target. Now I'm not talking about 3K or 5K. I want to give you a realistic bottom target if the US enters a recession. I want to show you where I think the absolute bottom will be. I want to show you why right now is such a critical level. And if we get above that level, I want to show you where I think a realistic top is. If we continue to go parabolic, where I think that actual top will be. And using this chart and this is on the weekly, and I'll make sure this is on the weekly. Going back since the beginning, using these key trend lines, these macro trend lines, and this is on log scale, so you can kind of get a better picture of percentages. I'm going to break this all down. I do have a lot of these lines started. This is because I have a lot to show on this chart, and I want to have it started to show you. But when I extend these lines out, it will make complete sense. So again, I'm going to break this all down. Guys, if we get leverage trading, 3 exchanges I use and trust are Bigot, BingX, and CoinCatch. CoinCatch is no KYC, so if you're in the US, that's a great option for you. BingX, you can do up to 150 times leverage if you like to really gamble and go crazy. And of course Bigot. All 3 of those, again, they have great incentives to sign up, but I use them because I trust them. If you want to learn how to trade on Bigot, this is a tutorial video how to trade. I'll link this video now. Once you learn how to trade on one, you can trade on them all. Now before I break down this chart, I do want to point out, guys, I've been in crypto since, well, 2018. This is the very first video I put up 5 years ago. I didn't even know the lingo, bull market, bear market, and rallies, and I was still learning. I got into crypto because I was mining Ethereum. Then that got me into watching YouTube videos about different coins, and that got me into charting. And I was doing my charting in Photoshop, guys. That's how new I was. But back then, when Bitcoin was at 6K, I was predicting that Bitcoin was going to have a 50% drop down to 3K. Look, October 2018. My very first video predicting a 50% drop, and it took place. I'll put links to it now if you want to check it out. It's kind of interesting, kind of flashback seeing me getting started. But the first call I made was correct. But the point is I've been in the space for a while, and I've seen when price pushes up, people get super bullish. They think it's going to go much higher, and then it just tanks on them, and they just don't understand why. When price gets up to a certain point, they say, well, there's no way it'll ever go back lower than another or a certain price, because they get so overly bullish. Now there's a few things I want to cover before we get to the charts. Now, I do believe that we're going to enter a recession. Now, some of you probably just are focused on Bitcoin and halving, and you think there's no way Bitcoin could drop. Well, I just want to point out why it seems a recession is likely. This is the interest rates, the Fed funds rate. These vertical gray bars are every time we have a recession. You can see when interest rates are high, as soon as they lower interest rates, you can see we get a recession. Interest rates are high, we enter a recession, they lower interest rates. Interest rates are high, then they lower interest rates, have a recession. They lower interest rates, recession. They lowered interest rates, recession. Lowered interest rates, recession. This was in 2000, it's like 2008 or so. This is dot-com bubble. They lowered interest rates, we had a recession. Notice interest rates were going up. When COVID happened, they lowered interest rates. We had a little mini recession. And you can see interest rates are now flat and they're going sideways. So when they lower interest rates, it just makes sense historically, going back to 1955, when they lower interest rates, we have a recession. The misconception is they lower interest rates, that means free money, the markets go up. That's not what happens. They lower interest rates because something has already broke. This is the, and I saw this on, this was another YouTuber, Venture Consulting or Reventure Consulting something. He mentioned this, which I thought this was interesting. The housing market has a lot to do with the economy as well. If you notice, this is a new housing units under construction. You notice when we peak, right? This was in 1973. As soon as new construction, peaked, and then they put a freeze on construction or stopped construction. Notice afterwards, these vertical lines are also a recession. When it peaked, we had a recession. You see it drop. It peaked, we had a drop, had a recession. Peaked, dropped, had a recession. Right here, it just continued down. We had a recession. It pushed up. We had a little recession here. We noticed it peaked up here in 2006. Shortly after, we had a recession, and then new construction declined. We pushed up. This was 2020. It was a little blip. We had that recession. You see it had a little peak and then dropped. New construction's at an all-time high right now. All right, we've already peaked up here, and this is as high as it was back in 1973. So another indicator that a possible recession is coming. This is the unemployment rate. Now this chart doesn't go to 2024, but you can see when unemployment is an all-time low, and then you start seeing unemployment go up. These vertical gray bars all show recessions. Unemployment goes up, recession. Drops, comes back up, recession. Drops, comes back up, recession. Pushes up, recession. Pushes up, recession. Pushes up, recession. You can see that every time. This is I guess this would be the dot-com bubble, 2008. Unemployment went up, recession. And you can see this huge spike when they had the lockdowns during COVID. We got this huge spike, right? And then unemployment came back down. Now unemployment is starting to tick up. I'm sure you've heard about all these layoffs. So what I'm saying is, when you start seeing unemployment start going up, and then the Fed decides to lower interest rates, that's a clue that we're topped out, and it looks like we're getting close to that point. Also, guys, you need to pay attention to stuff like delinquency rates for credit cards. You can see when delinquency rates go up, right? They start pushing up and they peak. We get a recession. After the recession, those delinquency rates go down. We push up, it peaks, we get a recession, comes back down. Notice delinquency rates were way up before COVID. And when that crash happened, we had a mini recession, they went way down. And now you can see delinquency rates are pretty much all-time high. Again, another indicator. So let me just break down this chart, and I'm just using macro trend lines. Now, if you watched my last video, I'll put a link up to it now. I covered why these rings are so key. And it's crazy when I extend these lines out and you see where these two rings intersect and why this is such a key level. But I think, again, a misconception that a lot of people have is they say, well, the reason Bitcoin crashed was because of COVID, which happened in 2020, this white line right here. Yes, we did get a hell of a crash, but if you notice, we peaked in this was 2019, we peaked around 14K. We were still coming down. We dropped, and that was a pretty significant drop. We dropped 53%. Then we pushed back up to resistance, and then when COVID happened, we dropped a total of, 64%. So again, we were dropping way before COVID happened. And remember, this is that video that I linked earlier where price was up around 6K, and I was predicting a 50% drop. And you can see that was a 50% drop from this point to this point, bringing us down to 3K. And again, my very first video I ever put up. So let me extend these lines out and show you that you can, if you're creative, you can actually find potential tops. This green line shows this top, this green line shows this top, and this green line can show this top. So if we continue higher, and I mentioned before, we will know, because if we cross one of these blue rings, we will get a pump. And I'll cover that too. So I'm trying to figure out how to show all this without repeating myself. So first of all, let's start with this red line. And if you notice, I start where you get this peak here, we follow it. Notice you got this red line here. So if we pull this all the way up, all right? Let's go actually to that white line right there. So you can see, let me grab my arrow tool here. Where is it at? So you can see right here, this was resistance, resistance, and then you can see this line right here was support. This was support. You can see that this was resistance, right here. Well, we're at that point, and I mentioned before how important where these two rings intersect, why this is just a critical level. And again, if we cross that blue ring, we know historically we get a pump. Look at this blue ring. Every time we cross a blue ring, we get a pump, pump, pump. We crossed it here, it became support, we got a pump, pushed above it, became support, pushed above it, pushed above it, pushed above it, had another pump. This is that video I made. I said when we were down 16K, I said this point we'd go long because of this blue ring. We've never crossed a blue ring without getting a pump. This is that next blue ring. So we know that if we go sideways and continue up, if we cross this blue ring, we know we're going much higher. But we are at a critical resistance level. This trend line goes all the way back since the beginning of Bitcoin. This is the 22nd of August 2011. That is a long ass trend line, and it has been resistance and support since the beginning of Bitcoin. We are now testing that key resistance. right here close to, that's sitting up around maybe 78,000. Now you could adjust this, you could bring it down lower or higher. I just want to show you why that's such an important level. Okay, so let's break down, before I give you bottom targets, let's look at potential upside targets. So if we go back, and again, if you get creative, you notice how that this is resistance, or this is support right here. Let me give you another arrow. So notice right here, this was support. It was support, and you can see right back here, it was resistance back here. So if we bring this line up, this pretty much gave you our top right here when we peaked at around, what, close to 20,000 in 2017. Well, if we take this line, you notice right here, this was support, right? It was more support. It flipped as resistance, right? And then COVID happened, and then we had a drop. Well, if you bring this line out, right, look what that does. Now this right here, notice we did push above it briefly, became support, then it became resistance, and then we topped out and we had a drop. So that pretty much gave you, if you follow this trend line, as support and resistance, right? Became support, became resistance, we topped out and we had a drop. So if we extend this line out, and again, that's what I'm saying, if we get above, so if you just start from this is where we bottomed back in 2022 around, what, 16,000? Well, if you pull this up, you can clearly see this is support, and resistance. If you bring this out, you know, if we push up, if we go sideways and push up, this looks like a likely top, but we still have to get above this resistance level. So I have one other metric, or one other thing I'm going to show you, but I want to show you why. And again, so for a possible top, let me extend this out. So this was our previous high back in 2021. This was our high in, this is also 2021. So if we bring this out, I mean, look at all the confluence right there. I mean, maybe you don't use the wicks, maybe you do, but you can see what I'm saying about these two rings. This blue ring and this orange ring, where they converge. You see all of this potential resistance right here, which means what happens if we get rejected from this point, well, we might have a lot of downside. If we get above it, well, then we can go much higher, and I will give you that target. But now I want to show you potential bottom target. So if we do enter a recession, where's a likely point that Bitcoin would drop to? So if we take this yellow line and this right here, so I'm going to give you those upside targets, I'll extend this one out, but this yellow line right here, if I extend this out and we go to where we bottomed, right? So right here, we bottomed at around, what, 15,500. This was our peak, all right? This was our peak around 20K in 2017. And we came down, we pushed up, we pushed above it briefly. When we broke above it, it became support, and we pushed higher, okay? Now let's look at this one here. Let's extend this one out. So this was our peak when we were at around $1,112 back in 2013. So let's bring this out. And if you'll notice, we had two perfect support levels. And take note, I think it's kind of interesting that where these lines converge is right at this ring, which I do find interesting. But again, let me grab an arrow here. So this was our peak. Again, this was when we were at $1,155, right? You can see it was support and resistance here. Then you can see it was support here. This is when we dropped down to $3,000 back in 2018. Became support again. This is after we had a COVID crash. We dropped down all the way to $3,785. And I'm telling you, when prices at 14K, no one ever thought we'd see $3,000 again, but we did. So you can see this is a very critical. It was critical resistance flipped as critical support. So this is the line to pay attention to. And you can see this line. This was resistance flipped as support, flipped as support. So that is a critical support level if we drop. Let's extend this out. So I just want to show you something. So if we do push up, so let me extend this out. So you could potentially go all the way to the top of the wick. You could just go from the meat of the candle to where I think this potentially was our top. This was in 2021. We hit around 67,570, around that area. So if we do push up, okay, so here's what I'm saying. If we do enter recession, which it looks like that very well could play out, then a realistic target, and I know people leave comments, when 3K, when 5K, when 8K. Look, the longer this goes on, I think is less likely. I don't think we'll ever drop that low. But if we did have a recession, it's good to have these targets. So that first bottom target, all right, so let's say that we get rejected here. And if you watch the previous video, I made it very clear why I think this could be a potential top. We know if we get above that, we're going much higher. But right now, if we drop, you know, if the longer this line takes, the lower that will go. So if we drop, you know, we're looking at potentially, depending on how long it takes, yeah, I think a realistic bottom target would be 14,000 down, roughly 14,000, depending when you make contact. Sooner, it would be higher. The next target below that, you know, we're talking about potentially, if it happens sooner, it could be 10,000. It could be out here around 11,000. But you can clearly see how important these lines are. They were critical resistance, goes back, again, since 2013. This resistance level goes back to 2011. So that tells you that those are your key levels. So if we enter a recession, and I need to cover, we're going to cover another chart that actually shows, it shows the Dow Jones. Actually, let me just go to that chart right now. We'll come back to this one. So I just want to show you a pattern, what happens here. Remember what I was talking about? When they lower the interest rates, we have a recession, lower interest rates, recession, lower interest rates, recession. New home constructions, when it peaks and drops, we have a recession, peaks and drops, we have a recession. Well, if you'll take note, this right here, notice you can see the Dow. This is a trend line price respect. We got above it briefly, became resistance, We had a little spike here. Again, this is the Dow Jones because it goes way back. That's why I'm showing this. But notice we had a little peak, right? We pushed up. That's when Bitcoin, again, peaked at 14K and started dropping. Notice the Dow pushed up, right? Hit resistance. And then we had that, that's when we had our COVID crash. That's when Bitcoin dropped down to, go back to this chart. That's when Bitcoin dropped all the way down back to $3,800. Well, you can see that this looks like a pattern that's repeating. It happened back here in 2007. Notice we had this little peak. We pushed up. Then we had this drop. And those are not small drops, guys. This came down. This was a 28% drop with the Dow. And notice what happened. Once we broke, right, we had our peak. We broke below. It became resistance. And then we had a major drop down to support. But take note, that's, if we measure the time for this, that was roughly, what, 308 days? Same thing happened here. Notice that previous support flipped as resistance, right? We had a little peak up. We topped out, and then we started coming down. And that drop right there, at least for the Dow, that was a drop of 55%. And you can see right here, when COVID happened. Again, we had a little peak. We pushed up to resistance and we had a drop. And if you'll take note, yeah, that there's some crazy wicks that come down, but look what happened. This was support, right? Support, briefly dropped below it, became support. Now this is resistance. We're testing a critical resistance level, but look at the time frame. You know, between these drops, they're about the same. The shortest time looks to be, this was about, what, 217 days. Back here, the longest one was about, this was 315 days. So you can see we're underneath resistance. We were underneath resistance, we dropped here, underneath resistance, we dropped here, underneath resistance, we dropped here, same here. So I'm just saying, if we enter a recession, we're at critical resistance levels. Yeah, we're at a new all-time high, but we're testing a critical resistance level. And with everything that's going on, a recession does seem likely. So you need to pay attention to that. So again, forget 3K, forget 6K. If we dropped, I think a great point to buy in would be around 14,000. You know, even if we drop down to 10,000, you know, I wouldn't want to miss 14,000, so I would buy there. You know, but if you did want to wait or add more to it, you know, 10K would be a great point to buy in. If we get below 10K, then it's game over. Something's wrong, everything's broke, and I mean, there's no reason to go lower than 10K. You know, probably no reason to go lower than maybe 13K, 13,600, depending how long this takes to play out. That's the bearish case. That's if we have a drop. Now, the bullish case. So let's just cover this. If, and I've shown you this, guys, and I just went over it briefly. Every time we cross one of these orange rings, and you can see how we'll price, let me just zoom out and you can see this. look how well price respects these orange fib circles. And actually, it goes way back. You can see right here, it was resistance, right? Look at this. It was resistance. We pushed above it. It became support. This next orange ring, it was resistance, became support. This orange ring, this one we peaked at what, 18,000, almost 19,000. This ring was resistance the entire time. Every time you hit it, we got a rejection. Then we dropped down, and then you can see we pushed above it. Notice the next ring, what happened? This next orange ring, it became pretty much resistance, got above it briefly, then COVID happened, we had that drop, right? The next ring, it was slight resistance, we pushed right above it, but take note, this ring right here, you can see that? That is where we topped, right at this ring, hit it 3 times and got rejected, topped out and dropped. This next ring became support 3 times. 1, 2, 3 times, actually a 4th time, we pushed up, tested on the daily, and then we had to drop to the next ring. That ring became support, and then we rode up it as resistance, and then dropped before that blue ring. And remember what I said, every time we cross a blue ring, we know we're going higher. This next orange ring, and this is where people were giving me a little crap, saying, well, you said we were going to drop when we passed the orange ring. Well, I did make it very clear, this doesn't always have to play out the same. It's a roadmap for price. Notice when we found support here, it became resistance. We just kept pushing up the ring, up the ring, up the ring until we dropped. Well, now it's just a more extreme version. You can see that this ring was support, right? It was support. We broke below it, and now we're pushing up. We've already tested this ring. When we hit that ring, we had a $10,000 rejection. So we know that that ring is being respected. If we push higher, yes, it is very possible. We will probably go parabolic. Let me bring this down just a bit. Again, you can adjust this. The point is this red line is a very key support and resistance level, and we're testing this line right now. So if, all right, we already know that this right here, potentially, and if we just follow this up, right, this could be a potential resistance level. And remember what I said, I believe the absolute top, if we do get above, let's say we get a wick above, you know, right here is around 73,000. The absolute top, in my opinion, what I'm saying is if we get above, all right, so let's say we get above 75,681, and that holds that support. The next point to watch is up around potentially 88,000. If we get to that point, I'd say if we get above 77,000, I'd say 77,900, 78,000, then this red line will become support. And that increases the likelihood that if we go sideways, for instance, so let me show you this with the brush tool. So if we don't get rejected here, all right, I think we could be topped out now. If not, we'll find out. We could test the ring one more time, but if we get above, let's say 74,000, and this becomes support, all right, that means if we continue to consolidate and go sideways, we know historically every time we cross one of these blue rings, we always get a pump. So that means this green line will be our resistance. You know, right here is 107,000. If we came back down and consolidated more and pushed up, we could push all the way up to 140,000. But I don't think we're going to go higher than, you know, if we were in a bull run, we would probably get topped out at 140,000, 142,000, maybe 150,000. That'd be the highest we would go. You know, people calling for $500,000, $1 million, that just seems insane to me. And again, just look back at these green lines. I mean, you can see this. If you follow this green line back, let me get rid of these circles here. You can see if you follow it back, you can see this was resistance right here, right? It was support, support, support. All right, it was support right here, and that gave you your top right here. Okay? If you follow this green line, again, this was support, right? It was support, then it flipped as resistance, right? You can see then it flipped as support, resistance, and then we topped out. So that means that this line right here, this is our support, this was support, it was resistance, so that will be resistance as well. That's why this is such a critical level. Either we get rejected here, a recession starts soon, and we start seeing Bitcoin start dropping, or if we get above it, well, then we know that this is the new trend line that price will respect. So if we get above that price, you know, again, support, 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 resistance, resistance, resistance to wherever we top out. But I don't think we'll go higher than that point. Now I do have a, let me grab this. Curves are a little tough because you can kind of, when you add curves, you can kind of tweak the curve a bit. But I did find it interesting that I was able to take this curve and I was able to start at our peak back here in 2011. And you can see it encompasses all of our peaks. This is our peak 2011. This was our peak here in 2013. This was our peak here in 2017. These were both of our peaks. This was 2021. This was also 2021. And look at all the confluence here. So if we push up, right? So if we get above this critical resistance level we're at now, and again, I showed you why. If we zoom in, I am on the weekly. On the daily, you can see it more clear. But you can see we got a perfect rejection at this ring. So again, we could be topped out here, but we know that if we get above, where we're currently at, maybe we get above, 74,400, and that becomes support. The likelihood of us going parabolic increases because that means we will be holding support here on a critical trend line. And we know when we cross this blue ring, we have never crossed one of these blue rings without getting a pump. And that means we will push much higher. But again, this is your next trend line to pay attention to. Again, this is depending when you hit it. This is like $102,000. Right here would be around 113,000. And if we could just continue to higher, maybe 150, I think that would be the max if we're in a bull run. But I do think a recession is around the corner, and that's why I'm saying, guys, you need to be careful. I'm not telling anyone to sell. I'm not telling anyone to go short or go long. I'm saying if you want to wait and see how this plays out, that's up to you. But in my opinion, the absolute top, maybe 110,000, maybe 150,000, but that's it. I don't see us going higher than that point. I think 150,000 is just, I think that's less likely. I'm just giving you some targets to pay attention to based on the charts. But realistically, I think we'll top out. Let me get rid of this curve here. Realistically, I think we will top out when we hit, if we get above this point. I think this is the point you need to watch. We could top out 89,000 if we go it sooner. We could top out here, but this is the line to watch, to pay attention to. And again, if you follow this line here, this was our previous peak here. This is pretty much a peak. We got resistance here. So that would be a likely target. So if we just kind of go sideways and up, I would pay attention to that upside target. But it depends on if we get above this key resistance. And again, I am calling the top between 72,430 and the absolute top where I would love for us to press up and short would be right here. Again, right here around, let's just say 87,500. That is a lot of resistance. We could get a fake wick up. If we push up to that point and started dropping, came back below this point, ideal point to short. But there's just a lot of confluence, for this to be a potential top. And again, I know people are going to be in the comment section, 18K and 19K. I don't think we'll go that low. I do think if we drop, if we have a recession, we're looking at maybe 14,000 down to 11,000 depending on when we make contact. So that's my bottom targets. But even where we're at now, even if we started going, we started pushing up higher and higher, I just don't think we'll go over 150K. I think if we hit 150K, I think you'd be lucky, and that would be the point to get the hell out. But right now, I think it's possible that we are topped out. Within the next month or so, we could start seeing unemployment numbers start going up, which is an indicator of recession's coming. You've already got a peak in new construction that seems to start declining now. When that happens, a recession happens. You got delinquency rates that are all-time high, and for this to come down, we have to enter a recession. And again, when the Fed starts lowering interest rates, when all of these come together, that means something bad's going to happen. But I did want you to just understand why or how you can find these bottom targets. We do know right here, this was resistance, right? And then you can see it became support, right? Support here, support after a COVID crash. So that seems like a likely point for support. So again, I don't think we go lower than 14K to 11K. I think that would be an ideal point to buy in if we had a major crash. If we get above 77,000, potentially 84,000, and we start seeing 80,000 become support, of course this on the weekly, this could take some time, then yeah, look for a target to 150,000, but I would get the hell out. I think that'd be the absolute top. Those are my most critical levels to pay attention to. I hope that makes sense. But again, understand what I'm saying. Every time we break one of these orange rings, all right, yes, we did get a drop when we crossed this ring, but this ring was support. I did say stay bullish before this orange ring, and I said once you cross it, when we come up and test it on the daily, that's the point to take profit on your long and start looking for short entries. So I think from this point, as long as we're below 72,800 around the area, I would be looking for points for short entries. If we get above that point, start holding support, and you see us cross this ring, then guys, we're going much higher, and we're likely not to have a recession. That's how I see the charts. Again, if we drop 14K to 11K, I think would be the absolute bottom. And if we do enter if we're continuing this bull run and we cross this ring, then again, I think your upside targets will be this line up to potentially this point right here. So the upside target's hard. It's kind of hard to nail down. I don't see us going above 150K, but we're at a critical level right now. It just makes sense that this would be a point you'd want to short. I do want to give you a key support levels just for today. I did cover this in yesterday's video. We're just breaking above a resistance level right now. This was support and resistance. This is hourly candle, 34 minutes time recording this video. Let me make this bigger so you can see it. So right now this is your resistance. Right now we're above it. That's right at 68,000. Your next resistance level just above, if you want to scalp for shorts, around 69,395. Your current strongest support, and you can see why this is the case. You can see this blue line. You can see it was resistance, resistance, flip that support, and you have this this line in this channel. So if we drop down a great point too long for a scalp long, 66,500. If that breaks your next key support level below, and again, I covered this in the previous video, why this is the case. I have charts on different time frames, but I just want to show you that this is a very key support level. It was previously resistance, resistance, resistance. It will flip as support, great point too long, up to 66,500. And your next support level below, if we drop, very strong support around 61,196. And your next key resistance level above 69,395 is up around 71,000. But again, I just want you to understand why we're at such a critical resistance level. Sorry this ran so long, but I think that it's very possible. Again, every time we come up and test this ring on the daily, we get a rejection. We break it, test it on the daily, get a rejection. We rode right up it, we dropped it, we came up and tested it. We're at a critical resistance level. So as long as we're below 73,500 around that area, I would be looking for a short entry. If we start holding above that point and you see us cross this blue ring, guys, go long, stay long, because we have much higher to go. But I do believe this green line right here is the one to pay attention to, because this was our previous support flipped as resistance, and it will flip as resistance again. So I hope that makes sense and kind of gives you an idea of what I'm looking at as far as your current critical resistance, potential upside target if we do not enter recession and we're in a bull run. And if we do have a crash, and some of you guys believe there's no way we'll ever drop that low again, well, I can tell you this. I know that when price was up here, you know, around, well, I wasn't around back here, but I know when price was up around 20K, no one ever thought we would drop down to 3K. When we were at 14K, no one ever thought we'd drop down to 3K again. We were up here around, what, this was 64,000, this pushed up to what, 69,000. No one ever thought we'd come back down to around, what, 16,000, 15,500. So I'm just saying anything is possible, but it's good to have those targets just in case. So again, don't repeat myself, go back and watch it. But we are at a critical resistance level. It would make sense to short from this point. If we get above that point and we break above this blue ring, historically, we have never crossed one of these blue rings without getting a pump. That means we're likely headed up to 100,000, 150,000. But in the meantime, we still have to get above this critical resistance level. And every time we hit one of these orange rings, we get rejected and have a substantial drop. So that's what I'm paying attention to. I will have this chart available on the website if you want to get access to it. I'm not sure what I'll name this chart, but I will make a post in Discord about that. Guys, if you want to get access to these live charts, the website's opticrypto.com. Links pinned in the first comment description. If you can't pay with USDT, but you need to email me through the website. If you do sign up, you will need to email me through the website to get access to Discord. And again, guys, if you want to get into leverage trading, 3 exchanges I use and trust are Bigot, BingX, and CoinCash. Remember, CoinCash is a no KYC. BingX is 150 times leverage. And again, these are great exchanges. I use them not for the incentives and the sign-up bonuses, but because I trust them. Guys, that's it. Trade safe, trade smart. I'm out.